Wall Street ended lower on Wednesday after Federal Reserve Chairman Jerome Powell told lawmakers on Capitol Hill that more interest rate hikes were, quote, a pretty good guess, reinforcing the central bank's commitment to taming inflation. All three major stock indexes notched their third straight daily declines, with the Dow ending 0.3% lower, the S&P 500 closing down 0.5%, and the Nasdaq sinking 1.2%. Megacaps and tech-related shares weighed the most on the market, including AI-related stocks Microsoft and Nvidia.
A lot of these companies have gotten very far ahead of themselves from a valuation standpoint.
Timothy Chubb is Chief Investment Officer at Gerard, a Univest wealth division.
Certainly, some of the technology companies related to AI have gotten overbought, and their valuation's extremely expensive. But more broadly, I'd say even some of the largest 10, 20 companies within the S&P 500, the Nasdaq, just seen so much multiple expansion take place without the earnings growth following it. It really puts them in a vulnerable position, especially given just how crowded they've gotten.
In testimony before the U.S. House Financial Services Committee, Fed Chair Jerome Powell said the central bank remains, quote, strongly committed to bringing inflation back down to its 2% target, and said future rate hikes are in the cards if the economy continues on its current path. But traders are taking a more optimistic view as interest rate futures pointed to just one more rate hike in 2023. As for individual movers, Tesla was the biggest drag on the S&P 500, sliding roughly 5.5% after Barclays downgraded its rating on the stock to equal weight from overweight, saying the recent rally in shares of Elon Musk's EV maker was too sharp relative to fundamentals. Shares of package delivery firms FedEx and UPS both dropped after FedEx posted disappointing quarterly earnings and said waning global demand is pressuring its profit margins. And crypto firms, including Coinbase, rose as Bitcoin breached the $30,000 level.